So going over your homeowner's insurance policies, it's kind of detailed. You want to make sure that the coverage is correct. A lot of times in the marketplace, it's very frustrating for us agents. We see agents trying to cut the cost down by cutting coverage. Now, who does that affect? You, the homeowner, right? You buy insurance so just in case something happens, your family's protected. So when that claim happens, it responds the way you expect it to. And that's why we as advisors have your back. When we go and we meet with our clients, we see each line of your policy and we try to make sure it's most appropriate for your needs. Example number 1, Coverage A. Coverage A should be written at a rebuild cost estimation. Now, you and I both know that inflation's happening, as well as the cost of materials and the cost of contractors have gone up this year. So we want to make sure that that Coverage A protects your family needs. Coverage B. Coverage B is other structures. Things that are not attached to your house, but they're structures. Fences, yard barns, gazebos, pools, driveways, sidewalks. Things like that, that's covered under Coverage B. So a lot of times we'll see someone with a large pole barn that Coverage B only has maybe $20,000 in coverage. Well, we know and you know that that pole barn could not be replaced for that amount. So we want to make sure that that coverage is accurate to the needs of the rebuild cost, not market value. So there's two ways to value, right? Well, you could sell it for with a realtor and then what a contractor could pay to rebuild it. So we always want to put it at rebuild cost estimation. The third thing is your personal property. There's two different ways of covering it. There's actual cash value and replacement cost. We want to make sure that you're covered at replacement cost because if you have a fire, tornado, or anything like that, you don't need 25 cents for a pair of jeans. You want your new pair of jeans, right? You're going to need new clothes, new furniture, new food, new appliances. Things like that are going to be covered under this coverage. Speaking of, we recommend our clients going around the house and taking pictures. A lot of times, an adjuster will only have a fixed amount of coverage for the national average. Well, we all know that we all have our collectibles, we all have our different things that we like. Maybe you have a shoe collection. Those are very important to take pictures of them, brand them, or in the most analytical way, create a spreadsheet with the amount, the make, model, and the serial number, and the place you bought them, and how much they were. So that being said, the preparation, an ounce of prevention for the pound of cure. So in your personal property, we want to make sure that you have the most details so you can defend yourself if you ever did have a claim. Now, I wish it was that easy, but on your home, there's so many different assets, they're built different. So if you have a basement, you need different coverages than if you had a crawl space or slab. So what we do is we try to identify those different coverages. Key points are backup of sewer and drain. How much is it going to cost to repair your basement and contents if there was water exposure in your basement? That means cutting it up about 2 foot in the drywall above where the water line is, drying it out, replacing the floor, replacing the contents, and then putting it back to where it was. The other part is earthquake. We all know we're on a fault line here in southern Indiana. Well, is earthquake worth it? Do you have enough principal in your home to rationalize having earthquake coverage? Mine subsidence. This is something we've seen all the time. Mine subsidence is thrown on all these policies because there's a rejection form. Don't be afraid of that rejection form. If there's no mine underneath where you live, it won't pay out anyway, so you're paying that extra premium for nothing. Some new additions that have happened in the last few years, there's basically 2 new coverages: equipment breakdown and sewer line coverage. We all get these mailers from the utility companies saying, for a certain amount of money each month, you can cover your sewer line or your water line or whatever. Most companies are actually adding that in at a $500 deductible with no wear and tear exclusion. Basically, if it happens, it's covered $500. The second one is equipment breakdown. Now this is a little bit more hairy. Equipment breakdown, there is a wear and tear exclusion. They know that they're not going to replace your 20-year-old unit that's outside that you've had and it has a life to it. If the condenser breaks down, there's electrical arcing, or it just suddenly goes out for no reason, they will let you have a certified contractor go out, interview, and take pictures and submit a claim at a $500 deductible, and it could be covered under that. equipment breakdown at a $500 deductible, and sewer line coverage at a $500 deductible. These are 2 coverages that we try to add on all of our clients. These are all some of the details, not even considering the fact of jewelry, guns, furs, collectibles, monies. All these different things are done and handled differently. That's why it's so important to have someone like us, a third-party advisor, represent you, the client, to build your policy appropriately. Then put it out to all the companies and make sure you're paying the most competitive price. You know, pricing is very important. We all know that. No one wants to pay more than they have to. However, do not sacrifice your coverage for price.